It's the famous trend day. It's that one where the market just goes from the low to the high in a straight line. It doesn't pull back. It doesn't respect any levels. It doesn't give you a chance to get in. It doesn't give you any chance to really make your money back. It's one of those days. Okay, like I always say, it's one of those days that. Early in my career, I used to lose a lot of money because I'd get it stuck in that frame of mind of, I've got this really good level here, and then you go further off sides, and you've got this really, really, really good level, and then you've got this really, 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 really good level, and the problem is. The further the market moves away, and trends effectively, the more sort of ingrained in your subconscious becomes that one of these levels is going to work, and it's most likely going to be my really, really, really good level. And what tends to happen then actually is the discipline goes. Okay, not with everyone. Again, I'm speaking for in my experience, for what I seem to have observed with a lot of traders, is that trend days do sort of almost, because they're so uncomfortable and because they give you no respite, they do tend to force a lot of traders into doing things they otherwise wouldn't, and that's the crux of it. So we're going to go over the concept of trend days, and the best place to start off with is these characteristics. Okay, now the best traders I know, they can all tell you a wonderful story about trade setups. Okay, they can really express these trade setups, and everyone tells them differently. Sometimes people say, oh yeah, the price action was really like bid offer, and some guys are like, well, you know what, it just felt very strong up there. You could see reloading, and everyone tells their story in a different way. So it's important that you learn to do this, what we call characterizing or characteristics. So define something in terms of observable characteristics. Okay, and the reason is simple. If you learn to observe things in terms of characteristics, okay, what will happen is in your brain and your subconscious, what you can start to do is you can start to develop almost key markers. Okay, so these markers allow you to go, all right, now I saw this trend day, it had these four things, and those are the four things that define this thing we're calling a trend day. Okay, now next time it comes, you'll recognize these markers. Okay, and the more you observe trend days, the more you'll recognize these markers, and the more that these markers play out, the more you'll start to recognize trend days. Okay, so what we're looking at the DAX for the 23rd of July, which is today, and the characteristics of a trend day. Number one, shallow pullbacks. Okay, it goes to be said a strong trend does have particularly shallow pullbacks. Okay, there's a high level of absorption. Right? I'm going to show you what these concepts mean in a minute on the charts. There's something which we call auctioning initiative. Okay, again, I'll show you this in a chart. And then we got lots of low volume areas. So I'm going to show you these three things now, and the best place to start is with just a traditional candlestick chart. Okay, so what we're looking at is the DAX, and I just want to illustrate this just on a simple 5-minute candlestick chart. Okay, so we can see the market started at 1 a.m. this morning, and we started down at 12,300, and currently the market's trading 12,500. So we've rallied over 200 points, and I think we're up about 1.6, 1.7%. Okay, really strong day. I think it's the strongest day since June 2018. So it is significant. Okay, it's a real standout day. Now again, this is why, as a trader, you got to drift away from. A lot of people say, yeah, but it was because of the earnings of the car makers or Continental, or maybe it was to do with Trump, or maybe it was to do with ECB policy. Okay, there's a number of reasons why it could have happened. We don't care so much about that. What we care about is the facts that we can observe. Okay, so the first fact we have to observe is the fact that from 1 a.m. in the morning, which is down here 12,300, up until the time the cash market came in, which is up at 12,380. Okay, so 80 prices higher. So by the time the cash market came in, the market was already 80 points higher. Okay, call it 0.5% higher. In other words, we've got a gap in the market. Okay, so the first thing, and this is where gap rules come into play and your gap strategies come into play. When there's a gap in the market, one of two things happen. Okay, the market either tests and fills the gap, in which case we distribute, right? Or the market tests the gap, fails, and then we have a gap day, a gap up day. In other words, a gap and run. Okay, you would have heard of these kinds of plays. Right? So that in its own doesn't mean anything. Right? We've come in, the market's gapped up. Right? Now we have to respond. We have to take in the facts, we have to observe the facts, and we have to respond. Okay? And the first thing we notice is on the open, okay, suddenly we get a very aggressive bid up. Now you should be asking, why? Why is it on the open that suddenly the market goes from pretty much 350 all the way up till, almost 50 tick rally in the first 10 minutes. What's going on here? Okay, now I'm going to show you an interesting chart so I can show you why this could have been a reason, or what could have caused this. Okay, this is a 30-minute DAX. Now if I scroll this out slightly, you'll notice that this area of 12,330, it was acting as a pretty interesting pivot point. Okay, not my opinion, the opinion of the market. How do we know it's an interesting pivot point? The first time it tested it, notice what happened. We had an auctioning. Okay, straight one-time framing. Market dropped from 12,330 all the way down to 12,200. Right, 130 tick drop in a space of 2.5 hours. Significant. Came up there a second time. Right? What did we see the second time? Again, buyers tried to get up there and they absolutely gave up. We dropped from 12,330 all the way back down to 12,250. So a good 80 pip drop, 80 tick drop. Okay, so we can see twice. Quite an interesting area, quite an important area in the market. Not because I say so, but because the market's responded off there twice. Suddenly, we come in and the market's opening at 12,380. Okay, so we've not just got a gap up in the market, we've got a gap above a previous little resistance area. Okay, an area where the market was resisting to go higher. Right, and that's why we've got the aggressive open. Right, we've had a little bit of stop run on the open. Now I'm going to bring this onto the footprint in a minute. I just want to talk the story through with you. Okay, so those 4 observations we're looking at. One is shallow pullbacks. Let's have a look at this. Cash opens, relatively deep pullback. Okay, that's almost a 70% retracement of that initial drive. Right? We then test a second time, and then suddenly we get initiative. Okay, so initiative is simply just a market response. High volume, high price change. Initiative. Shallow pullback. Continuation. Shallow pullback. Initiative. Okay, shallow pullback. Initiative. No pullbacks. Okay, so no pullbacks over the course of the day. At no point has this market tried to retrace or been able to retrace. Okay, and we can see initiative currently taking place in the market. Okay, so what we have is a very, very clear lack of being able to pull back. Now notice, we have the shallow pullbacks, we have initiative, we have high levels of absorption. Okay, so when the market does rotate up, and as I'll show you on the footprint, you'll see high levels of volume being transacted here. Okay, now that absorption is important to understand because there is selling there is selling taking place here, guys. A lot of people go, oh, no one was selling it. Right, if you look up in this section over here, right, and I'll show you this on the footprint, you'll see a substantial amount of selling. The only difference is that there are buyers that are very aggressively bidding. Okay, and that's the absorption we're looking for. Right? And then the last one is obviously the low volume areas. In other words, when the market does initiate, what do we leave here? Sets of single prints. Okay, initiate, sets of single prints. Okay, single prints are just simply areas where no volume transacts. Okay, so between this price of 12.36 all the way up to this price of almost what's that, 20 prices. So that 20 price area doesn't get traded, or doesn't get transacted in for the entire day. Okay, and we see that happens once over here. We can see that happens twice over here. Okay, and to an extent 3 times over here. Alright, so that's our 4 characteristics playing out on a candlestick. Right? Let me show you what this looks like on the market profile now. Okay, so this is what the day type looks like, a trend day. Right, so again, we'll go through that. We can see if we want to see the initiative, we simply open it up. Okay, now initiative on the volume profile, we're just simply looking at the range expansion of TPOs. Okay, and the lack of trade, within those TPOs. So we can see market initiates. Right, we get a bit of two-way trade. Initiation, two-way trade, initiation, initiation, initiation. Okay, so we can see the shallow pullback. So there's a lack of TPOs trading back. Right, lots of low volume areas. We can see on the volume, low volume area, low volume area, low volume area. We can also see as the day goes throughout, we can see the volume just trying to distribute higher and higher and higher. Okay, so that's what it looks like on our profile charts. Now let's get on the footprint, because this is where the real sort of clues, the subtle clues are coming through in the market. Now